So today I'm going to talk about the new stock that I bought. As I said a few days ago, or a few weeks ago now, I said that I bought 2 new stocks, and I talked about one of them the other day, which was Lovesac, and this is the other new stock that I bought. And I bought this one a lot heavier than Lovesac because I feel like Lovesac could be a pretty tough few months with a high interest rate environment. This one, however, is doing absolutely amazing, and I see it not slowing down at all. So you might be thinking, where's the money come from to buy these 2 stocks? And it has come from selling a stock, and I put a bit of that into Lovesac, and I put most of it into this company. And I will tell you what company it is that I sold when I do the stocks I'm buying November edition in probably a week's time. So if you want to know what stock it was, you'll have to wait a bit unless you're on the Patreon. Obviously, you guys know what stock that was, but we did make a bit of profit on that stock. But we'll get stuck into this stock that I've been buying again. It is a stock that I did used to own, but I hope you enjoyed the video. Let's get started. And always, if you do want to support the channel and know what I'm buying and selling in real time, the place to be is on the Patreon. There's also a Discord with 500 members on to talk about stocks, including myself, and you also get 2 exclusive videos a week on the Patreon. One of them being the live Q&A session that we did last night. Obviously, you can't ask questions during the live Q&A now because it has finished, but in future Q&As you'll be able to ask questions, and you'll also still be able to watch the replays in case you do miss them. We'll get stuck onto the stock that I've been buying, and it is Celsius. So Celsius, obviously most of you guys will know, is a stock I used to own. I did end up selling out of Celsius, and I can tell you it was a mistake. I should not have sold out of this stock, and it was a stock that obviously made really good money on. I was buying around the $50, $60, $70 range during the 2022 stock market crash that it had, and I sold shares out at really good amounts of profit. And in fact, if I held the shares now, I would actually be currently up 141%. But I did sell out the position, and it was a mistake. I should have trimmed the position rather than selling it all. But at the time, I had a few concerns around it. Now, obviously, you would have seen previously, I've covered this stock on the channel quite a few times, and it's been one of the channel's very good performers that we've had. Obviously, we've had a lot of good performers, but this has been one of the more recent ones in a really tough environment as well, which has been very impressive. But I was wrong to sell this a while ago. I had a few concerns, and maybe because of the environment that we've been in, I was a bit rash to sell it all. Obviously, you know, when you make profit, you can't look at it as too bad of a decision. The aim is to make money, and if you make money and be happy about it. But I should have held this, and I realized after a while, I was like, this could potentially be one of the biggest kind of multi-baggers in the next 5-10 years. This is a copycat of Monster, and if any of you guys know Monster, Monster has been one of the best performing stocks in the stock market in the last few years. And if you have a look at the Monster beverage stock chart, and by the way, have you seen it? Actually, Monster's having a dip at the moment. Add it to the list of opportunities out there. Even Monster's having a dip at the moment. But yeah, I mean, if you look at Monster's stock chart, I mean, if we go from 2010, for example, the stock has become a 10-bagger, and you look at all the similarities between Monster and Celsius, and they're basically copycats of each other. And the thing as well is, I think Celsius could be bigger than Monster. I look at Celsius and I think, people look at Monster and I think they've got that kind of reputation now of maybe being a little bit more unhealthy, and I think Celsius kind of fills in the gap. Like, if I went to the shop now, and I've tried Celsius, the product, and if I went to the shop right now and I wanted to go get an energy drink, I would choose Celsius massively over Monster. With Monster, I feel like I've always enjoyed a Monster beverage, but I feel like there's a bit of a come down from Monster energy, and I feel like when you're having it, you can kind of feel like this isn't really good for me to be having one of these. But I think when you have a Celsius, and I know this is quite hard because obviously they're not here in the UK yet, but they are on Amazon, but not in actual shops, and that's probably one of the big potential expansions for them. But you have a Celsius, and I feel like the taste is a lot better. I feel like you don't get that big sugar rush and that big come down. You just have that nice little lift. And I think, I always think if I go into a supermarket or a petrol station and I wanted an energy drink, I would massively choose Celsius over Red Bull or something like a Monster, for example. So I think they are really going to come for Monster in the next few years. So I think the product's fantastic, and I've had a few flavours of them as well. But going back to the point is that I did sell out Celsius. I sold out Celsius because I was a bit worried that the valuation had gone up a bit too much, and then actually they came out with the recent earnings and they were far ahead of what I was expecting on revenue and profitability basis. I was worried about Q4 declining, and then it turned out it was only a blip, and I should have waited for a longer period of time before being rash with the decision to, sell it all. And the financial health of the business has really improved because of the investment from Pepsi. And I was also worried about the new entry and the international growth. I feel like they weren't growing at international growth fast enough, which they have sorted out. And I was worried about the new entry of Prime. I thought Prime would be a very big competitor for them. And then realising that after tasting Prime, and also it was a bit more of a popularity surge, short-term trend. Realistically, the product's not very good, and it's probably more just kind of a short-term popularity. Celsius realistically is the real deal. It's the one that actually has a decent product, a decent tasting product. So, in case you've never seen Celsius before, this is a recent stand in Las Vegas at the moment. Obviously, they've got the F1, and you can see the shape of the F1 car, and they kind of got all the cans down here. And there's a few of them. If you ever were to go on Celsius, or if you ever to go to America and you were to go into, say, a Target store, you'll actually see a few of them kind of stands or coolers with all the products there. And it does look pretty good. The recent data from Celsius as well looks very strong. You compare it to these kind of legacy energy drink market, which, by the way, this has so much growth. If you ever go talk to anyone, I would say maybe 25 or under, you ask them like, oh, what's your way to get like energy in the morning? Like the amount of people that are coming, or younger people that are coming through right now, and they don't drink coffee. They don't drink coffee. They all drink energy drinks in the morning, and it's crazy. And obviously, if people are going to do that, obviously, especially the young generation, hopefully they go for the one with most taste, and probably one of the more healthier ones, which is Celsius. And the other day I had a few people that were doing work experience with me, and they were all under 20. And I said, I think there was 3 or 4 of them. And I said to them, I said, oh, do you want a drink? I'm going to get a drink of coffee. Do anyone want to drink coffee? And they're all like, no, we've all had an energy drink this morning. And I was like, okay. So, that's what's happening. But, if you look at the recent data as well, in the last 4 weeks, energy drinks as a whole is a massive growing area. You see here, energy drinks is up 7.3%, growing rapidly with the younger generation, as you see here. Monster grew at 5.7%. That's about historically what they normally do grow at the moment. Bang Energy is obviously down massively. Red Bull up 1.1%. They seem to struggle for growth a little bit more at the moment. Pepsi down 8.2%, and that's probably the reason why they've been scrambling into Celsius, because they realise, it's a really good company. If anyone, Pepsi have all the good data, and they're probably looking at their energy market growth and going, that's really poor. And obviously they've clearly looked at Celsius and go, we're going to buy Celsius. And if you look at Celsius in the last 4 weeks, up 130%. In the quarter to date, up 132%. And you get all the data what they've previously grown at. And by the way, look at the trailing quarters. The growth at the moment is higher than where it has been trailing. And thanks to Luke, who shared this on the Discord, by the way, because that's where I got it from. Pepsi as well, they've thrown 550 million into Celsius. They're clearly seeing that how good this product's shifting, and realising that they need to have a stake in them, and they're going to be the next big energy drink. So obviously when you got an investment from Pepsi, that's obviously a really sign of big confidence, and that's also strength for the balance sheet up when we have a look at the balance sheet. And you can see the coolers once again here that I've taken here. Now, if you look at the recent quarter, like I said, really good. The growth is really good. The North American revenues was up 114%, and I was worried that this was starting to slow down, and it's nothing like that happening. More SKUs, more locations. It's all dragging towards the bottom line as well. When you look at the gross profit, an increase of 168%. If you look at the net income as well, that was up from, is now 0.52 compared to 0.12. So the profitability is ramping up huge. And if you look at the cash balance, which once again I said there was the weaker part of the balance sheet, they're at 60 million cash this time last year, and now they sit on 681 million. So that's nothing to be worried about there. And if you look at longer term, since they have started pivoting into the energy drink market, just look at the growth that this company has delivered, and it's still very much its early stages at the moment. And if you look here, all the latest data here, you can see Celsius is now the second largest energy drink on Amazon, behind Monster, obviously overtaking Red Bull. So that's probably going to start showing in the stores and overtake Red Bull in the stores, and I reckon we might see Celsius actually take over Monster in the coming year. You see here, retail sales is up 25% year on year. compared to Amazon's growth of 11%. Like I said, I think they're slowly trending into retail is this growth here at the moment. So as soon as they get more SKUs and more locations, I think Celsius is easily going to take over Red Bull as well. And this obviously, if they can replicate this in the international markets with the deal they've had now with Pepsi and the distribution network they're going to have, access to for the international growth, that's going to be major. That's where they're going to come a monster-sized company, no pun intended. And if you look at the growth here, obviously they had the one-time charge because of the Pepsi deal, but the growth is going to be ramped up. I think analysts are sleeping on profitability as well. I think they're going to drag that profitability up in line with the revenue as well, which should be very good. And obviously, that's absolutely fantastic growth, really, really high growth as you see here. Like I said, financial health-wise, it's an amazing balance sheet now. There's no debt on there, and obviously they've got 681 million of cash as well, which is obviously a really healthy amount for them to be holding. Now, just to put into context how much they're overachieving by as a company, if we actually go to a year ago, and if I scroll up, so you see here next year, it said the average EPS guess was $1.16. If we actually look at Celsius, they're actually going to do this year $1.80, which is a massive increase. If you look at the revenue growth, analysts were forecasting revenue to grow 53% this year, and that was on February the 26th. If you look at what they're actually forecast to grow this year, the company is actually going to grow 91% this year. So that's a major increase from where they were. And once again, you're seeing analysts now forecasting 38% revenue growth. I realistically think we're going to see Celsius once again with another 50% year of growth, and that should also start dragging up to profitability. You look at the profitability, the average EPS is from $1.80 up to $2.63. And what that means is that a few people might look at Celsius and go, it looks a very good company, a good balance sheet, good growth, but it's a bit expensive. Well, realistically, when you do look at the growth and they're at 61 times earnings, I agree that it might look a little expensive, but when you actually start factoring the growth, it comes down very quickly. So 61 times earnings for a company that's just come off 90% growth, the EPS is going up massively as well, the profit's going up massively as well. We've seen a carbon copy company do this before, which is Monster, and Monster was one of the best performing stocks in the last decade. So you're thinking, you might have a chance to own one of the best performing stocks in the last decade all over again. This is obviously a 52 billion market cap company. Celsius is down at 12 billion. This is a company that you might easily see go to 50 billion in the next decade and be a very good performer and could potentially even overtake Monster. And you got the chance to, buy it here. And, the valuation, when you look at the growth, it looks maybe a little expensive, but when you look at the growth, it's really going to catch you up really fast. And at the end of the day, for me, I bought a position. I bought recently. Celsius has been having a dip, as you can see here, peaked at $200, went all the way down into the $150 range. I bought $150, so I am up on this position about 10%. And I thought I'm going to buy a position because if this goes up to be a 50 billion market cap, I'll regret, selling my shares. So I bought from that point of view. But at the end of the day, if this stock realistically, I can't see a stock that's doing these financials grow. Probably, I can't see it going below on a share price less than $100. But realistically, let's say if it does get to $50 again, let's say it does start dropping to $130, let's say it gets to $110, let's say it does get to $100 again. Well, for me, I'll be happy with that because, if this stock, goes to $100, the company then starts trading at 40 times forward earnings, which I think is too low for a company that's doing these levels of growth on profit and revenue in the balance sheet. But then I can buy more shares. So it's a win-win situation for me here, is that either the shares are going to go ballistic from here, or it does have that crazy pullback and I can buy more shares and build a bigger position at a better cost basis. But I think this company, realistically, like I said, I'm buying this because I think this is going to be a major company. The growth is really good if they can replicate that into Europe, into the UK, and we've seen this before. Like we're not doing the unknown here with Celsius. We've seen what a really good brand and company and energy drink company can do. We've seen it before. It comes one of the best performing stocks in the stock market. So when you're seeing exactly the same company that was basically at the stage that Monster was at, in 2013, and if we just have a quick look at Monster Energy Markets market cap, for example, Celsius, 12 billion there at the moment. Monster was 12 billion back in 2014. So, if you look at 2014 from a share price point of view, the stock, obviously went on to do, 307% performance in 10 years, which I think we'd all be happy about. If it wasn't for the dip before that we've been on recently, we were nearly up to 400%. So, You know, at the end of the day, I'm either going to have a very good winner that's going to do very well in the next 5-10 years, or it goes down and I buy more shares, and if I get a lower average, I have more on the upside. So it's a win-win situation for me here. I either have a company that does very well, or I have a company that goes down and does very well. But I think when you look at Monster, you're seeing the carbon copy here with Celsius, and I definitely want to own it because I think I'll regret not having shares in this one going forward. Hope you enjoyed the video as always, guys. Smash the like button if you're not here, subscribe. See you in a bit.